Hey everyone, welcome to another video on stock analysis. As always, my name is Shantanu, and in this video, I'm going to be talking about one of my portfolio stock. The name of the stock, as you guys might have already guessed, is Goodyear India Private Limited. And I'll in this video, I'll tell you about why I like this particular stock, what is the business model of this particular company, and uh, why am I holding this stock and what are the future prospects, right? So let's start. So first, I'll tell you about the business model in very brief, you know, and then we'll move on to the financials. We'll study what is good with the company, what is happening with the whole auto segment and the whole tire sector in detail, and then finally I'll take a look at the chart and tell you um, what's the forecast, the future, right? So talking about the business model, so again, Goodyear is a global brand, as you might have already known. It's in the US, and it's in the Europe. It's also in Asia Pacific region, and particularly talking about India, it's a very well known brand. And this is a direct competitor to another brand, which is BKT, Balkrishna Tires Limited, which is another stock I like, but I chose Goodyear uh, to invest my money in, and I'll tell you why. But yeah, the main idea or the main business model of Goodyear is to manufacture tires, especially for the agricultural sector, and that essentially means they deal with tractor. They also deal with consumer vehicles companies, and yeah. Right. So now one argument that you can raise is that since consumer vehicles are, facing a lot of semiconductor chip shortage, then will this affect the stock in any way? Because if you don't sell cars, that means you're not selling tires, right? So, in short, the answer is yes. This will affect the sales of Goodyear, but not in a major way because again, their focus is on tractors only. And another reason for that, a technical reason can be that whatever bad news regarding the semiconductor chip shortage was there has already been absorbed in by the stock. So if you look at the chart, we'll look at the chart later on, but if you look at the chart right now, you'll see that the stock has suffered a huge fall. So that news has already been factored in, and moving forward, let's hope that the stock goes up and not down. And another reason why I'm preferring to opt for this stock in the for the longer run and for the next 1 or 2 years is because the Indian government is heavily focusing on the development of rural infrastructure. So you might read this, you might have already known about this, but the government is, allocating 25% of its budget towards rural development. So that's a good news for tire manufacturing companies which focus on farms, agricultural sector, such as Goodyear and BKT. So that's a very short, intro on Goodyear's business model. And now I'll talk about some financials. So if you can see my screen, I have Goodyear India Limited opened on Screener or in. This is the website that I use for analyzing all of the financial data. And if you can see, the market cap is good. It's 2000 something crores. Uh, Now the main metrics that I'm interested in is the PE ratio. So if you would look at the PE ratio, it's 14.3, and I think the sector's PE is higher than this stock's PE. So that's a good point. Another point to notice is ROCE, return on capital employed. So this should be around 20 to 25%. Right now it's 20.9%, which is good. And yeah, that's another reason why I prefer this stock. Another obvious reason is the high dividend yield. So it's nearly about 10%, which is huge for any investor. So good, that's another plus. Then if you would take a look at debt to equity ratio, it's 0.02. Yeah, 0.02, which is again, it's a nearly a debt free company. So another positive. And yeah, looking at the quarterly results, so again, in this section, I'm mostly interested in how the company is performing quarter on quarter, with regards to sales, expenses, and so on. So I'll just analyze quickly, how the sales numbers are growing from September 2018 for onwards. So if you see in September 2018, the sales was around 489 crores, and then in June 2021, it has been 534. So not a major change in the sales, but again, it's increasing, so that's a good sign. Regarding the expenses, again, the expenses I think have been pretty stagnant. If you notice, it was 444 a couple of years back, and it was hovering around that price range only. And then right now it's 489 or 500. So not a major change in expenses, which is also good considering all of the inflation and all of the fluctuations in the tire segment, or I should say in the rubber segment. Operating profit, so it was 45 in 2018. Now it's still 45. So that's a negative. But considering that we are in a stage where the pandemic is just about to end, so I think, in my opinion, this number would grow eventually. So that was all about the quarterly sales section. Again, nothing too fancy, nothing too, uh, I think the one negative that I noticed is operating profit is pretty stagnant. But considering that the tire sales have died down due to COVID, and especially there is a demand, and especially the focus of government improving this particular sector, I think this particular section, especially operating profit, will rise in the near future. So again, pretty balanced thoughts on this quarterly results, but let's move forward and analyze. So profit and loss, again, sales have been growing consistently. So in 2009 it was around 993, and now it's around 2000. So that's a good, you know, that's a good growth that we are looking at. Operating profit has been growing as well, 123, and then I think in December 2012 it dipped down, and then it started rising again. So again, good sign. um, you can analyze, you can always go to screener in and analyze all of these financials in detail. I'm just skimming through so that at least what I look at when I analyze a stock. So compounded profit growth 10 years 6%. It should be around 10%, 10 to 15%, but again 6% is okay. And yeah, uh, 10 years of CAGR 13% is fine for a large cap. And now coming to balance sheet. So again, like I said, this is a nil debt company. So again, nothing to look in the balance sheet section. Regarding cash flows, so again, this company is generating huge cash flows, and I think the recent dividend announcement of theirs of 80 rupees per share is something which backs that statement. So again, cash flows is good, even though the company, I think in March 2020, even though they didn't generate that amount of profit, yet their cash flow was pretty huge. So um, I think they granted dividend also in that year. So yeah, considering the cash flow and the books, I think this company surely uh, falls under the green flag segment. Regarding ratios, so debtor days usually the ideal number should be 45. It's 55, which is greater than 45. It should be less, but again, this is okay, as it has been hovering around 40 to 45 if you look at the historical data. ROCE, again I said it's around 21%, which is fine. And if you notice the ROCE, it's consistent. So I know it's falling over here in this particular year, 2011 2012, but again it's there has been a consistency which has been following, so really like that. Shareholding pattern, which is promoters hold 74% of the company, and they have not sold any shares of their own, which is a very very positive sign. FIIs on the other hand have sold in huge quantity. So again, I think in September 2018 it was 2.36, and now on the old only 0.82. Right, that's one negative. But again, if you look at DIIs, so 6.26% in September 2018, it was around that only, and then they started increasing their percentage from September 2019 onwards. Right now it's at 7.49%, which is also good. Rest of the shares are owned by public, so it's around 17% only. Again, the consistency has been maintained over here. So uh, one way to identify a good stock is to look at these numbers and look at the consistency. Although FIIs have sold their share, but the DIIs are increasing, so this balances this out. The promoters aren't selling their shares at all, and the public has been the public the public shares have been trading, or the percentage is at the same level, uh, comparing it with September 2018 onwards. So good sign, all of these. So again, the only negative that I could find is the profit has not been, uh, I would call it as appropriate. But I think that moving on forward with government heavily backing the agricultural industry, this number would eventually rise. This again, just reviewing and just brushing up on all of that we discussed. So again, good dividend yield, zero rate company, has a good brand value. Goodyear, all of us know, it's a global brand actually. The ROCE also checks off. The books are also clean. Cash flow is positive. Cash flow is good actually, and yeah, I think all analyzing all of these metrics, made me realize that okay, this is a very good company that I should be invested in, and so I bought this stock. Um, Now, quickly reviewing the charts. One second, let me open the charts. Right, so we have opened Goodyear's chart. As you can see, there was a huge rise. There was a huge demand for the stock. It went up to 1325, and then it started falling. I think this fall, takes into account the semiconductor chip shortage issue, and now the stock is consolidating at around 1,000 level. So for me personally, this is a very good opportunity to invest in this stock. And this consolidation basically means that the stock is neither falling nor it's going up. That means people are just buying and selling, which means there is some interest. But generally consolidation means in stock market terms that people are buying this stock, and it wouldn't be I wouldn't be amazed personally if the stock, some in the near future rises up, with a very huge volume, because again, the consolidation shows that there is some buying interest. Uh, right. So this was all about Goodyear, and this is one of my portfolio stock. Um, if you like this video, please do hit the like button and comment down below if you have any questions or if you want me to review any other stock. Uh, cool. I think this was it for this video. Have a nice evening. Bye.